The healthcare sector's really lagged broader markets for nearly 3 years. The sector peaked out on a relative basis at the end of 22 after having a very, very strong year. The different piece this time, which has made the pullback probably the most significant in the last 30 to 40 years, focus on a relative basis, has been what's happened with concerns over the new US administration. And so that's been particularly painful over the last 9 to 12 months. Now, where we find ourselves is because that period of underperformance has been so striking, it's attracting new investors to healthcare. You know, I can see it in the market. I can see it in terms of potential interest in our funds. And so I'm hopeful that the sector's bottoming out on a relative basis and that healthcare can do much better. We're seeing some signs of a turnaround just in terms of starting to get a little better performance from the large mega cap stocks. In the last few weeks, there's been a number of catalysts to do with finally clearing overhangs that have been in place over the last several months, again to do with US policy concerns. So that's triggered some strong moves. We've seen better performance from small mid-cap healthcare, which is encouraging. If we do get clarity on these overhangs that have been in place on the sector, that really releases potentially almost like some locked up performance with valuation now so low. So if the valuation can lift, if clarity comes on these concerns that investors have had, then it should be very positive. There are three key drivers for healthcare thematically right now. Firstly, volume growth driven by demographics and also lagging effects of the pandemic. So we're seeing greater than expected volume growth versus pre-COVID. And then emerging market volume growth is super strong. The second driver, new product cycles, we're seeing that on a broad-based. It's so important because 80% of the investment universe is product companies and they thrive obviously with new products coming out. And then lastly, healthcare is incredibly fragmented. It needs to consolidate. So it's a sort of long-term structural story, but we're seeing a cyclical uptick start right now, and you know that may have legs. So three key fundamental drivers. The subsectors that we think are the most well-positioned considering the fundamental drivers that we're bullish on. Utilization story, exposure to healthcare equipment or med tech, healthcare providers, healthcare services, distributors. They're some of the subsectors that should really thrive with improving volume growth. So those areas we're bullish on. In terms of new product cycles, we're seeing it across biotech, across pharma, across, again, healthcare equipment or med tech, and also one really interesting area, generics. So where over the next several years, we're going to see for pharma one of the biggest, well, the biggest generics cliff, if you like. And so that's offering a lot of opportunity for the generics companies. And then lastly, M&A is valid across the whole spectrum of healthcare, but particularly you see it in small mid-cap biotech, pharma and medtech, where also we have lots of exposure. The trust currently positioned with broad-based exposure to healthcare. You have the multi-cap approach. We see real value across lots of different subsectors. That's why we're so diversely exposed right now to exploit that, particularly high exposure to biotech. New product cycles, M&A is a story there. High exposure to healthcare equipment or medtech, again, utilization, new product stories there. And then exposure to different things like healthcare providers, managed care, life science tools, pharma. So again, it's a broad-based approach, and you know our job is to just find the best stocks within that because we're optimistic across the board on the subsectors.